I know that John Williams from Shadow Stats attempts to calculate inflation based on the calculation parameters that were used in the 1970s. I'm less familiar with his techniques, frankly, because in terms of making investment decisions, sometimes things that aren't true but are widely believed are in the near term more important than things that are true but are in fact intellectual anomalies. Whether the inflation number is 8.6 or 12.6, people need to understand that their savings and their investments are declining in purchasing power fairly rapidly, particularly when juxtaposed to the returns that they're getting on their savings.
Before we move on from inflation, I think there's an important life lesson that can be brought up here, and I know you and I have had multiple conversations on the sidelines of conferences on this, and I always really appreciate your insights. So, when you talk about the importance of savings, especially for moments like this, right? After we've had such an incredible party, as you say, how do you find a balance of, okay, I've made a comfortable living, I want to enjoy life, but remembering that, stop looking at savings as boring, but as, a lifeline, as being vital. How do you find that balance?
Well, I went overboard when I was younger. On the other side, I consistently saved, 35 or 40% of pre-tax income, which meant that after tax, I spent very, very, very little. The consequence of that is that although saving is an ingrained habit, any saving I do now is sort of silly from an economic point of view. But I suspect that the old financial advice about saving 10% of every paycheck, pre-tax, no matter what, so-called paying yourself first, before you have a Starbucks, before you buy a new pair of shoes, before you do anything, that you pay yourself first, that you take 10% out of the paycheck, you take 10% out of the interest receivable from your savings, everything. 10% of gross income pre-tax should be saved. And I think if people were able to do that, from a financial point of view, if they invested the proceeds reasonably prudently, that over 40 or 45 years, they'd come out okay. The second form of savings, Daniela, doesn't get the attention it should, which is to say investing in yourself, developing your personal brand, developing your skill sets, learning how to create or further a product or service that is in demand, that generates enough utility for people that you will be needed in any economic circumstance. If you look at yourself, Daniela, you've invested in your own career. You've learned how to interview people like me. You have learned how to take complex topics and make them simple enough that people can understand them in half an hour. And the consequence of that is that inflation for you for the rest of your life will likely be something that's of academic interest, but won't threaten your family. I don't mean to make you blush, but that's a form of savings. Building your own expertise, building your skill set, understanding how to service your customer, irrespective of who the customer is probably a more important form of savings than saving 10% of every paycheck pre-tax. Remember that knowledge can't be stolen. It can only be lost. And building up the knowledge that's necessary to serve a market is probably the most important form of savings at all. Wow. And I'm delighted to say that I've spent 50 years learning how to do it.
You are the master, and I appreciate your comments, and I'm still learning every day. So, okay, moving on from the topic of inflation now, I wanted to speak about the 3-day meeting in Madrid that just wrapped for NATO, right? And I know there was a lot of tension on Finland and Sweden being invited, but for the first time, China was included in NATO's strategic concept adopted at the Bloc Summit, as I said, in Madrid this week. The document was last updated in 2010, and it lays out the security challenges facing the alliance while outlining a course of action, and now says China's ambitions and coercive policies challenge the allies' interests, security, and values. Beijing did not like this. What do you make of the fact, I mean, should we be reading into this? Is it a big deal that China for this first time is included in this NATO blueprint for you?
I do think it's a big deal, and I think it's a bad deal. I think that the world is better off when people talk to each other and trade with each other than when people fight with each other. I absolutely agree with NATO's statement, which is to say that the ascendancy of China threatens the interests of the NATO partners. A different question is, should it threaten the interest of the NATO partners? I don't want to get too much hate mail from your listeners, but I would like to point out that the U.S. defense budget by itself is bigger than its 9 largest competitors combined. The last time I looked, there were U.S. troops forward stationed in 70 countries. When you compare Chinese assertiveness with American assertiveness, what you find out is the Chinese have been very reticent about asserting their ambitions. That isn't to say that people shouldn't be threatened, particularly China's immediate neighbor, with the Chinese ascendancy. It's only that NATO is in many fashions the pot calling the kettle black.
I want to also talk to you about another headline since we last saw each other. A lot of countries now banning the import of Russian gold. Do you think this will have any impact on the gold market?
I think it'll have no impact whatsoever. One of the lovely things about gold is it's very durable and it's very uniform. And there will be a number of countries that will not ban the import of Russian gold. So, as an example, Russian gold will go to India, and it will suddenly become Indian gold. And it will then reemerge in Dubai, and it'll become Arab gold. And from Dubai, it'll be sold to Americans, and it'll become American gold. With a commodity like gold that can be melted, refined, and recast, the idea that sanctions are going to work is the height of silliness. It will be an inconvenience to the Russians. The Russians might have to sell it, at least some of it, at some discount to spot. But I suggest that, as an example, removing Russia from the SWIFT banking system so that they can't sell materials in dollars and making the ruble unconvertible means that gold will become an increasingly important method of payment between various countries, Russia included, that object to the extraterritorial nature of U.S. law. And I think that might impact the gold price. I don't think that banning the import of Russian gold will have any impact on the gold price, but the increasing utilization of gold as a medium of exchange between countries that object to the extraterritorial enforcement of U.S. regulations might be very important to gold. It might cause